Everyone, welcome to another episode of Sitting Down with Matt and Mark to have your questions answered. That's right. Each and every week, we take questions that are asked on my primary channel, Mark Moss. As I'm doing those videos, I'm asking for people to ask questions about those videos. We're grabbing 2 questions from each video each week, and we're answering them over here on this channel. Now, when we answer your question on this video, you are able to earn $25 in Bitcoin just for asking the question. We love the questions. We love to answer them over here. The catch is that you have to ask them on the original Mark Moss channel, and you have to be watching these videos to see your question asked or answered, and then let us know down below. Just send us a comment and we'll go ahead and hook you up. So anyway, with that, let's go ahead and just jump right into it.
All right, Mark. So we're back for another episode. This one came from the Fed pushing assets like 1970, where to go? Now, this was a really good question because I actually resonated with it. I thought of my mom, I thought of my dad, because they all have 401ks. So this question is specifically directed towards that. And I'm curious to hear your answer on it too. So it's from Keith Ledford. I'd like to hear your opinion about the way the government is creating inflation and potential hyperinflation, how it will affect 401k plans. Would it be better cashing out and taking the penalties and having the ability to invest in hard assets, or leaving it in and having them devalue it by who knows how much? Great question.
Yeah. So thanks for that question, Keith Ledford. So the first part of the question is, I'd like to hear your opinion on the way the government's creating inflation. So we'll just assume that they're creating inflation or hyperinflation. And then the question, I think, was, how will it affect my 401k plan? So that's, I think, the part of the question. So how will inflation affect my 401k plan? And so the first thing I'd say is that the 401k plan is just a vehicle to invest, right? A 401k is nothing. It's a vehicle. Mm-hmm. What's inside the 401k is stocks. So the question really is just a general question that would affect everybody, which is, how would inflation or hyperinflation affect stocks? Because the stocks are what's inside the 401k. Now, the 401k, because it's a vehicle to invest through, it has restrictions. So, you can't close it out. Maybe you can't self-direct it, things like that. But at the end of the day, like I said, it's the question is really, how will hyperinflation affect stocks? Well, and then the second part of the question is, would he be better to cash out and take the penalties so he could invest into hard assets, or leave it in and then have them devalue? All right. So when inflation devalues the currency as they as they print more dollars, create more dollars. Each new dollar created devalues or debases the existing supply of dollars, makes them worth less. Yeah. It inflates it away. So they're devaluing the currency by inflation. They're not devaluing assets. So actually what's happening is, as we've seen, about 35% of the existing money supply that's out there today of the currency was created in the last 12 months. So they've inflated the currency supply and they've debased it. So now everything's gotten more expensive. That's why all 3 stock indexes are at all-time highs. Gold's almost at all-time high. Bitcoin's around all-time. All these assets are all-time high, and not just those assets, but real estate. And the more scarce the asset, the more we're seeing it go up in value. But even used cars are up big time. I mean, you can't even get a kayak or a mountain bike today. Yeah. And so as they're inflating the currency, they're debasing it, but it's pushing asset prices higher. So back to the first part of the question, what happens to my 401k plan? Well, you have stocks in there. And as I said, stocks are rallying to all-time highs. Now, at some point, unfortunately, this currency collapse is going to catch up with them. And then at that point, we could see a massive drop in asset prices. So anyway, I think you just need to kind of reframe that, Keith. The other thing that I would say is you mentioned, should I cash out and take the penalties in order to invest into hard assets? And so what I would probably do is talk to your plan administrator and see if there's a way that you can convert that into some sort of a self-directed plan. And in the right self-directed plan, you might be able to do that. I know there are IRAs. I work with a company called iTrust IRA, and you can invest into gold and Bitcoin through your IRA. So you might be able to convert it over and then transfer some into a different type of IRA account without incurring those penalties, and then get into those hard assets that you're talking about. But again, talk to your plan administrator.
Yeah. That was spot on. I mean, even if he did cash out and go into hard assets, then again, he's playing the risk of saying, well, we're going to have inflation and you're going to pick up non-correlated assets like gold and whatnot that will increase. It's the perfect hedge against inflation. But if inflation is happening in asset prices like equities and other things, then I mean, for the most part, if inflation continues how it is, his assets are just going to keep skyrocketing. So
Right. Yeah. Especially in that hyperinflation example that he's asking about, potential hyperinflation.
exactly,
So in hyperinflation, the last thing you want to do is be cashed out. What you want
exactly,
to be
yeah,
doing is staying invested.
yeah,
What I would probably say though is that, we don't know the way this unfolds. It's going to be messy. And so having a mix and different allocations to different types of assets is going to be key. And so if you can't get to that, if you can't control that, then what I'd recommend is to understand what's inside that 401k and then build a portfolio on the side that then can counterbalance that.
yeah. It's all about having a very diverse portfolio. You want to cover all bases.
Yeah.
It's
Yeah.
all
And not like Ray Dalio preaches like an all-weather portfolio. So kind of always being ready for everything. I don't necessarily agree with that specifically. I think what I like to do is I like to tactically manage my portfolio. So I'm not actively trading it, but I'm tactically manage it. So that means that I'm just kind of watching and I'm paying attention and I'm pivoting. So right now, obviously, we're more geared towards inflation. It's pretty evident. We're printing trillions of dollars. The Fed balance sheets are going back up again. So it's pretty evident that we're geared for inflation right now. They said they're going to, quote, let it run hot. So I want my portfolio to be lined up more for inflation. As they start to taper, then I'll shift my allocations for deflation, maybe, for example, as opposed to like what Ray Dalio preaches with his all-weather portfolio. It's like be ready for everything all the time. So I think it's pretty evident what the Fed's doing. They're telling us, and so I'm kind of shifting a little bit for that.
Yeah, I would say one flaw in the be positioned for all weather circumstances is you made a great analogy. It's like you take a long position, but then you take a short just in case if that long doesn't work out. One cancels out the other. So if you have a portfolio that's completely hedged, completely all weather, they're always going to be canceling one another out. You're
Yeah.
never really going to get the returns you want.
Yeah, that's exactly right. So it's kind of like if I was in Vegas and I was playing roulette and I put an equal amount. So I put $10 on black and I put $10 on red.
Yeah.
So it's like, well, I could win black or red, but it just cancels it out, right? So what I might do, I wouldn't, but what I might do in this example would be put $100 on black, and then $20 on red or something, that'd be one way to hedge it. It's not really what I would do, but yeah, to your point, like the all weather portfolio would be like putting the same amount of money on black and red at the same time.
Yeah.
Then the problem is then in roulette, then you also have the green that comes up once in a while, and so you could lose either way.
Exactly. Yeah. Well, that sums up Keith's question. We appreciate the question. It was a great one too. Definitely answered a lot of my myths that I had in my head.